Welcome to Overnight Market Brief, Pre-Market Edition by AGI Era. Good morning. Today is Thursday, February 19th, 2026, and it is shortly after 8 a.m. Eastern Time. This is your executive summary of global market developments, analyzing the overnight flows in Asia and Europe, the key macro drivers, and the setup for the North American Open. The prior session and macro context. First, a look back at yesterday's close. Wall Street finished firmly in risk-on mode, driven by rate cut hopes and continued enthusiasm for AI. The S&P 500 settled at 6881, advancing 0.6%, while the Nasdaq 100 climbed 0.79% to close at 189. Crucially, the session was driven by a narrative of supportive monetary policy and strong corporate earnings. But the real story right now is in the macro assets. Right now, the 10-year Treasury yield is trading at 4.101%, up 0.015%, 0.37%. The U.S. dollar index is up 0.160% at 97.78, while crude oil is up 1.57%, around $66.07. The rise in the 10-year Treasury yield and the strengthening U.S. dollar reflect the market's continued digestion of recent hawkish FOMC minutes, which are tempering rate cut expectations. This macro shift is acting as a headwind for growth-oriented equities. Concurrently, crude oil prices are extending gains, driven by escalating geopolitical tensions between the U.S. and Iran, with reports of a military buildup in the Middle East. Overnight session, Asia and Europe. Moving to the overnight session, global markets have been mixed, with a cautious tone prevailing in Europe. In Asia, the picture was mixed. In Tokyo, the Nikkei 225 finished up 0.57% at 57467.83, tracking broader regional sentiment. Meanwhile, in Greater China, data from February 16th was up 0.52% at 267705.94, while the Shanghai Composite data from February 13th was down 1.26% at 4082.07. The divergence here, particularly the dated Chinese indices, suggests a lack of fresh catalysts and localized factors. In Europe, major indices are trading lower. European shares opened on a defensive footing, weighed down by the stronger dollar and broader risk-off sentiment stemming from the hawkish Fed narrative, providing a cautious lead-in for U.S. traders. U.S. futures and the open. Turning to the U.S. pre-market, equity futures are under pressure. S&P 500 futures are trading down 0.14% at 6,884.5, while Nasdaq 100 futures are down 0.27% at 24,888. The relative underperformance in Nasdaq futures suggests investors are rotating out of tech and growth stocks, directly correlated with the uptick in the 10-year yield and the stronger dollar, alongside persistent AI disruption fears impacting various sectors. The daily catalyst. Looking ahead to the session, investors are focused on three key catalysts. First, the continued digestion of hawkish FOMC minutes is influencing rate expectations and driving the strength in the U.S. dollar and Treasury yields. Second, escalating geopolitical tensions between the U.S. and Iran, which are directly impacting crude oil prices and contributing to broader market uncertainty. And finally, the ongoing evaluation of AI's disruptive potential across various industries, coupled with upcoming corporate earnings reports, which will shape sector-specific performance and overall market sentiment. Given the overnight setup in rates and the dollar, the market's path of least resistance appears to be lower, pending any surprises from the data releases. That concludes your overnight market brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.